In this video, we'll be going over understanding the engulfing candle and just understanding why this candle works so much in the Forex market. Well, just why it works in all markets, in fact. Okay? And I'm going to give some examples. Now, these examples are without support and resistance. This is just looking at the engulfing candle itself. And this is an important thing to understand. Why does the engulfing candle work? So we're going to go through step by step in this video a basic understanding of this candle so that you can feel a little bit more confident into understanding what the candle is doing. Okay, so let's begin. Okay, in this example, I'm going to go over this example on the daily charts once again. Okay, now it works on all time frames. Okay, when it aligns with, and when it aligns with structure, it's a very powerful thing. Okay, so let's just begin. All right. So first of all, I've just outlined two signals, two engulfing candle signals. We've got a bullish engulfing candle here, right? Now, what makes these candles important? We can zoom in even more. What makes these candles so important is they're breaking the previous candle's high, right? Okay, which basically tells you that it's hitting other people's stop losses. So that's number one, right? Which is a very important thing. You'll always find there will be an engulfing candle at the beginning of every single trend change, whether it's short term or long term. On a second aspect I wanted to go over is the break above. What happens when price breaks above? When price keeps breaking above or below the signal, it indicates a trend. Let's have a look at this as an example. When price broke below this engulfing candle, price continued down. Now let's look at this one. When price broke above, let me draw it up properly. When price broke above this candle signal, this bullish engulfing, the price continued up. Now, it's not to say how long the signal is going to go for, but it's a measure of sentiment in the market. Let me see if I can see another one just by pulling the chart back. Here's an example of another one. Bearish engulfing, breaking below, hitting stops about here. Yeah? Right? And the market went down. Right? Very simple. Here's an example of a false bullish engulfing candle. Price broke higher, but it continued on its downtrend. Like I said, not all signals are going to work. You know that. There's no such thing as a 100% success strategy. Here's an example, but we do know that we need a valid, with these valid signals, that the price moves most of the time. So while this was not valid, most of the time, it is valid. And when we align it with structure, it makes it very valid and gives you an exceedingly high probability trade. Now let's have a look at this one. Bearish engulfing, enter below, meaning you're taking out even more stops, and the price went down. This is a classic standard. This is like an A grade, yeah, A grade, an engulfing trader signal for this strategy. This is an A grade signal, right? Pull the chart back a bit further. We got a bullish engulfing, right? Price broke above, price went up. We got a bearish engulfing, price broke below, price went down. Right? Bullish engulfing, price broke above, price went up. Bearish engulfing, price broke below, price went down. I could keep going over this all day. Bullish engulfing, price broke above, price went up. But if you notice, when the price breaks above, that's when it usually moves. That's what usually tells you whether it's a valid signal or not. Yeah, see here we had a bit of a reversal, a mild reversal here, a fake reversal. Yeah, that's what you call a fake candle, fake signal. All right, and the market went down a short bit, but then rocketed back up, gave another valid signal, bullish signal, price broke above, and it rocketed up. So yeah, if this was a support and resistance zone, yes, you would have had a very small losing position, but the next signal was a valid signal and it rallied way beyond the amount that you lost in this position. This is why I keep going over the process. Trading is a process. You're looking for high probability trades at support and resistance. And what sort of support and resistance am I referring to in the engulfing trader strategy? The daily support and resistance. And why would I be referring to the daily support and resistance? I'll sum it up in one word, in a couple of words. The daily support and resistance works over 70% of the time. And that's all you need to know. So when you combine that with an engulfing signal, you have a very high probability trade on your hand. Okay? So we can keep going along. Bearish engulfing. Price breaks below. Market goes down. Bullish engulfing. Price breaks above. Market goes up. Bearish engulfing. Price breaks below. Market goes down. And as you can see now, the market just keeps bullish engulfing. Price breaks above. Market just keeps repeating this over and over again. Very simple, So this gives you a bit of an understanding of how the market is moving with engulfing candles. Let's look at another pair, right? Let's look at about 4 pairs with this, just so you can get the complete understanding and a little bit of confidence about these candles. And then you can actually go do your own back testing, own testing yourself. Look for it on your own charts. You'll see what I'm talking about. Okay? The engulfing candle is the most powerful price action signal in the Forex or any market, stock, anything. Okay? Let's have a look at the Australia-US. Let me zoom in again. Let me zoom in on this pair as well. All right, so we can see it in really clear detail. Price is moving down. Almost got an engulfing here, didn't we? No. Price is moving down. Like I said, I'm not drawing support and resistance here. I'm just showing you the power of engulfings by themselves. And that's what I was saying, with the engulfing trader strategy, we're combining the power of the most strongest form of structure, support and resistance from the daily, which gives an exceedingly high probability trade. But in this video, I just want to show you the power of the candle itself. Look at this. Bullish engulfing candle, break above the high, price goes up. Bearish engulfing candle, break below the low, price goes down. Let's have a look and let's see if we can see another one in the past. Oh yeah, bullish engulfing candle, break above the high, price goes up. Here's an example of a bit of a false signal, bearish engulfing candle, break below the candle, price. Well, that's an interesting one actually. Right, so it didn't break below the pin, it did break below the body. So let's have a look at this. Right, so it broke below the body, the price still went down 42 pips. Right, yeah, well, it's really strong, valid signal that we would consider awesome in the engulfing trader strategy, but it's not a big loss. Yeah. At the same time, this isn't going to align with major structure, so it wouldn't be a trade that you would take. Here's an example of a trade that did align with structure. A bearish engulfing. Okay, previous resistance comes back to resistance again, right here. Got this bearish engulfing candle. This is the daily charts on the AUD/US, if you're wondering, and the price went down. Over here, this was a confirmed resistance zone. Let me draw it in. All right, just to show you an example with the resistance. Now I'll get rid of it because we really just want to focus on the candle. Bearish engulfing candle, right, at resistance, hit resistance, came down, price did come back up again, but then it fell apart and went down. Didn't break above the resistance area, meaning this was a successful trade with the engulfing trader strategy. Right, this is below resistance, so not so valid. Not a signal we would take with the engulfing trader strategy. Yeah? Okay. So let's have a look at another pair. Oh, well, let's have a look at one more signal here. We can see one here. Bearish engulfing candle. This is a weekly resistance line, right? 97. Okay, this is a weekly resistance line. If you want to look at the weekly, you can see what I'm talking about. All right? Not that it matters. We're looking at the signals only. We're looking at seeing what happens when a bearish engulfing candle happens. Right? Bearish engulfing, price goes down. Simple, yeah? Break below the low, price goes down. Let's look at another pair. New Zealand, US. Here's some recent moves on this pair. Bearish engulfing, price went down. Didn't go down very far, but it went down, yeah? Went down just under 60 pips. Bearish engulfing. Right? Now you can look at this from both ways. Right? Bullish engulfing, break above the high, price went up. Bearish engulfing, price broke below the low, price went down. So you can include this. Yeah? Or even this one. Took a few days, price went up though. Right? Okay, so yeah, break below the low, price went down. Right? Even if you got in late with this one, well, if you took this candle, price went up. Right? Here's a valid, not that you would enter here. We're entering at structure points, right? Price went up just over 50 pips. Still a valid trade, right? Bearish engulfing, break below the low, price went down. Bullish engulfing, break above the high, price is going up. All right. So let's have a look and see if we can see another one. Here's here's an example of a daily resistance line, resistance area, identified from back here. Right? We had a bearish engulfing candle, price break below the low, price went down. Now let's give an example with this trade. Price went down, allowing a trader that traded with the engulfing trader strategy to get over 200 pips with their second trade. Their first trade to 1-to-1, which would have been about here, and their second trade down to here for just over 200 pips. Simple price action that works time and time again. When it breaks the lows or breaks the highs, when there's an engulfing candle at structure points, it usually means the market's going to continue in that direction based off sentiment. Right, let's have a look at another pair. All right, here's the GBP US. Okay, let's have a look at some recent moves. And by the way, if you're wondering, this is actually a daily and weekly resistance line right here. Okay, from the past. You can go check it out. Now we've got this bearish engulfing candle. Price went lower. Bullish engulfing candle. Yeah, it's a bit of a too big a risk to take with the engulfing trade strategy. Yeah, the candle's too big. But if you did take it, what happened? Broke above, price went up. Yeah, bearish engulfing candle here and here. Price went down. Broke below, price went down. Bullish engulfing candle here at previous support. Let's draw that in. Let me zoom in a bit so you can see it a bit more in detail. Support zone, yeah? We can all agree there. Support zone. Okay. Tried to get below here, couldn't do it. Support was being too strong. Okay. Bullish engulfing candle. Break above the high, price went up. Simple price action. The power of the engulfing candle. Right? So in summary, there is actually, 3 things you want to look at when you're looking at a valid engulfing candle and as a price action signal. Firstly, you want to look at this signal as in the candle, what it's meaning. It's breaking the previous candle. Let's look at this closest signal right here. right? And let's go over these 3 points once again. It's breaking the previous bearish candle's high, right? Which means it's breaking the highs, it's hitting other people's stop losses. Okay? That's one valid point. The second valid point is that it's telling you that there's a major shift in the market. There's more buyers getting in on this candle. Now, in the opposite way, it'd be telling you there's more sellers getting in the market. And the third valid point that you want to be looking for is a break above to tell you that it's trending and then jumping on that trend. So they're the 3 major points that you want to look at when you're trying to understand the engulfing candle and why it works. Okay? Now let's go back to the first part that I went over where I said it's hitting people's stops. Well, what happens when it hits people's stops is it usually rallies in that direction. Like as an example, if you're a seller, and in this example, if you're a seller and your stop loss is here, like after this candle, like say it's sold after this candle somewhere down here, and you're a seller and your stop loss is here, when it hits their stop, it's the same as buying. And that's the reason that markets usually rally after it's hitting the stop. It's commonly called breakouts. Okay? So that's one of the key aspects that, as a trader, we're looking at as well with our price action. And the engulfing candle shows this in itself, in the candle. As a filter, we're also looking for these signals at structure to give high probability trades. And so that's where the engulfing candle comes in, and why in the Forex market, and basically any market, it's the most valuable candle and most valid price action signal you can trade. Well, thanks for watching, and happy trading.